What is up, everyone? Today we are delving into how I turned 100,000 Nairas into 121,000 Nairas in 90 days without trading. By the end of this video, you will learn 1. Exactly what a Nigerian Treasury Bill is, in plain English, no confusing finance jargon. 2. How much money you actually need to start, and spoiler alert, it's not millions of Naira. 3. The step-by-step process to buy Treasury bills directly from your phone using an app, from depositing funds to clicking buy. 4. The secret difference between taking your interest upfront versus reinvesting it, and why reinvesting can double your returns over time. 5. The current interest rates available in 2026 and which tenor gives you the best bang for your money. And finally, I'll show you a real example using the Investor 2.0 app, so you can follow along even if you've never invested before. Today we are delving on how I turned 100,000 Nairas into 121,000 Nairas in 90 days by investing in Nigerian Treasury bills. And no, this is not a scam. This is you lending money to the federal government of Nigeria, one of the few investments in this country that is virtually risk-free. But before I dive in, here is something most YouTubers won't tell you. Most people fail to grow their money because they chase get-rich-quick schemes. Treasury bills are the opposite. They are boring, predictable, and powerful. And boring is exactly what you want when you're protecting your hard-earned Naira. So grab a notebook, put your phone on silent, and let's get into it. And remember, if you watch until the end, I'll show you exactly which button to press inside the app so you don't make a costly mistake. If that sounds good to you, hit subscribe right now. Great, let's get right into it. Section 1. What is a Treasury bill? Alright, let's start with the absolute basics. A Treasury bill, often called a T-Bill, is essentially a loan you give to the Nigerian government. That's it, you are the lender, the government is the borrower. Now, why would the government borrow money from you? Simple, sometimes the government needs cash to cover short-term expenses, maybe to pay salaries, build roads, or manage budget deficits before tax revenue comes in. Instead of printing more Naira, which causes inflation, they borrow from people like you and me. Here's the beautiful part. Treasury bills are short-term investments. We're talking 90 days, 182 days, or 364 days. That's 3 months, 6 months, or 12 months. You are never locking your money away for years. And how do you earn money? Through something called a discount. Let me explain with an example. Suppose you buy a 100,000 Nairas Treasury bill with a 20% interest rate for 364 days. You do not pay 100,000 Nairas today. Instead, you pay a discounted amount, roughly 83,333 Nairas, and the government promises to pay you 100,000 Nairas at maturity. That 16,667 Nairas difference is your interest. You earned it simply by waiting. This is different from a fixed deposit at a bank. With a fixed deposit, the bank pays you interest later. With Treasury bills, your interest is effectively calculated upfront. You pay less now, get full face value later. That's the engine. Now, who issues these T-bills? The Debt Management Office, or DMO, under the authority of the Central Bank of Nigeria. So you are dealing directly with the federal government, not some random fintech startup. Is it safe? Let me put it this way. If the Nigerian government fails to pay back Treasury bills, we have much bigger problems than your investment. That means hyperinflation, economic collapse, total chaos. In other words, T-bills are considered the safest Naira-denominated investment in the country. They are not risk-free, nothing is, but they are as close as you can get. So that's the foundation. You lend to government for 3 to 12 months. You pay less now, you get more later, and the government has never missed a T-bill payment, and I mean never. Now, let me answer the question everyone asks. How much money do I need to start? Section 2. Minimum investment and where to buy. This is where most people get confused and give up. So pay close attention. There are 2 markets for Treasury bills. The primary market and the secondary market. Primary market. This is where you buy directly from the government through the DMO. The minimum investment here is 50 million Nairas. Yes, that's 50 million Naira. That is for institutional investors, banks, pension funds, rich companies. If you have 50 million Nairas sitting around, congratulations, call your banker. For the other 99.9% of us, we use the secondary market. Secondary market. This is where existing T-bills are bought and sold between investors. Think of it like a resale market. Someone who bought a 50 million Nairas T-bill in the primary market can sell 100,000 Nairas portions to regular people like you and me. The minimum here is 100,000 Nairas. That's right, you can start investing in Nigerian government debt with just 100,000 Naira. That is less than the price of a mid-range smartphone. So how do you access the secondary market? 3 ways. 1. Through a commercial bank. You can walk into any major bank, ask for their treasury bill desk, and they will help you. The downside? You have to visit a branch, fill out forms, and sometimes wait days. 2. Through an investment bank. Better option. Investment banks specialize in this. They offer better customer service and often lower fees. But you still need to open an account and sometimes call a relationship manager. 3. Through a digital trading app. This is what I recommend for 90% of viewers. Apps like Investor 2.0, which I'll show you, Cowrywise, or Bamboo allow you to buy T-bills directly from your smartphone in under 5 minutes. No paperwork, no branch visits, no phone calls. Personally, I use Investor 2.0 because it was built specifically for Nigerian assets, stocks, commercial paper, and treasury bills. It is secure, licensed by the SEC, and user-friendly. But before I show you the step-by-step, let me explain how interest works, because this is where you can either make a little money or a lot more money over time. Section 3. Interest payment, upfront versus reinvest. This is the most underrated part of treasury bill investing. Most people never learn this, and they leave money on the table. When you buy a T-bill, you have a choice. Take your interest upfront or reinvest it. Option 1. Take interest upfront. Let's say you invest 100,000 Nairas at 20% for 364 days. The app calculates your interest, roughly 16,667 Nairas. With upfront interest, you receive that 16,667 Nairas immediately, today, right into your wallet. Then at maturity, 1 year later, you get back your original 100,000 Nairas. So you walk away with 100,000 Nairas capital plus 16,667 Nairas interest that you already spent or kept. This is great if you need cash right now. Maybe you have a school fee deadline, a medical bill, or a business expense. You put in money, get paid immediately, and still get your capital back later. Option 2. Reinvest the interest. This is my personal strategy. Same example. 100,000 Nairas at 20% earns 16,667 Nairas interest. But instead of taking that money out, I tell the app to add it to my principal. Now my new investment becomes 116,667 Nairas. The next time I invest, that larger amount earns even more interest. The interest itself starts earning interest. This is called compounding, and over multiple cycles, it is powerful. Let me show you numbers. With upfront interest after 1 year, total equals 116,667 Nairas. With reinvesting for 2 consecutive 364-day periods, assuming same 20% rate, year 1, 100,000 Nairas right pointing arrow 116,667 Nairas. Year 2, 116,667 Nairas right pointing arrow 136,111 Nairas. That is 19,444 Nairas more than taking upfront interest over 2 years. And if you keep reinvesting for 5 years, your 100,000 Nairas becomes roughly 248,000 Nairas without you doing any extra work. That is the magic. The app handles all this math automatically. You just click one button, reinvest interest. So unless you need cash immediately, always choose reinvest. Your future self will thank you. Now, let's open the app. Section 4. Step-by-step walkthrough. Investor 2.0 app. Step 1. Open the Investor 2.0 app. Log in with your PIN or fingerprint. Step 2. Look at the bottom menu. You see 5 icons: Home, Invest, Portfolio, Wallet, Profile. Tap Wallet. Step 3. My wallet shows 0 Nairas balance because I haven't deposited. So I tap Deposit, enter the amount. Let's say 100,000 Nairas because that's the minimum. Click Next. Step 4. Choose funding method. You have 2 options: debit card or bank transfer. I prefer bank transfer because it has no instant charges. Select bank transfer. Step 5. The app shows you a unique account number. Something like 0123456789 with the bank name. Let's say Providus Bank. Copy that account number. Step 6. Switch to your bank app. Create a transfer. Paste that account number. Enter exactly 100,000 Nairas. Reference? Usually your name or phone number. Send the money. Step 7. Go back to Investor 2.0. Tap Transfer Done. Pull down to refresh. Your wallet balance now shows 100,000 Nairas. Now we buy the T-Bill. Step 8. Tap the Invest tab at the bottom. You see Nigerian stocks, commercial paper, treasury bills, and maybe mutual funds. Tap Treasury Bills. Step 9. A list of available T-bills appears. You'll see 90-day tenor, roughly 3 months, current rate, approximately 16 to 18%. 182-day tenor, 6 months, approximately 19 to 21%. 364-day tenor, 12 months, approximately 20 to 22%. I'll tap the 364-day bill because I want the highest rate. It shows maturity date, exactly 1 year from the auction date. Let's say interest is 20.7% yield. Step 10. Now you choose interest option. I tap Reinvest Interest, remember Y from earlier. Then enter amount, 100,000 Nairas. The app confirms your wallet balance covers it. Step 11. Tap Buy. Processing takes about 3 to 5 seconds. Step 12. A summary screen appears. It shows investment date, today's date, maturity date, 1 year from today, discounted value. What you actually pay, around 82,800 Nairas. Net interest, approximately 17,200 Nairas. True yield, 20.7%. Review everything. If correct, tap Proceed. Step 13. Success screen. Your order has been processed. You now own a Nigerian Treasury Bill. The government owes you money. That's it. 13 steps, under 5 minutes, all from your phone. Now, here is a critical warning. Some people see discounted value and think they've been cheated. No, you paid less than face value. That discount is your profit. At maturity, you will receive the full 100,000 Nairas. Don't panic. Also, the interest rate shown might be 18% discounted, but the real yield is higher, typically 20 to 22%. The app shows you both. Always look at the yield number. That's your true return. One more thing. If you don't have Investor 2.0, you can also use Cowrywise. Their T-Bill feature is called Government Treasury Bills, or contact your bank's investment desk. But the app method is fastest. Now, let me tell you something most people won't. What are the real risks? Section 5. Risks, Taxes and Current Market Conditions, 2026. Let me be 100% honest with you. Treasury bills are low risk, but they are not no risk. Risk number 1: inflation risk. If inflation is running at 30% and your T-bill pays 20%, your purchasing power actually decreased by 10%. You have more Naira, but those Naira buy less. This is the real enemy. In 2026, Nigeria's inflation rate has been volatile. Treasury bill rates have risen to compete, currently 18 to 22% depending on the tenor. Compare that to savings accounts paying 2 to 5%. T-bills still win, but inflation can eat your gains. Risk number 2: Naira devaluation. If you eventually want to convert to dollars or another currency, a weak Naira destroys returns. For example, you earned 20% in Naira, but the Naira dropped 40% against the dollar. You lost purchasing power globally. If your expenses are in Naira, rent, food, local transport, this matters less. But if you have foreign ambitions, be careful. Risk number 3: liquidity risk. What if you need your money before maturity? You can sell your T-bill on the secondary market, but you might not get full value. You could sell at a small loss if interest rates have risen since you bought. The longer the tenor, the higher this risk. That's why I recommend sticking to 90-day or 182-day bills if you think you might need cash early. What about taxes? Good news. In Nigeria, individual investors do not pay withholding tax on treasury bill interest. The government encourages saving. However, if you invest through a bank or app, check their terms. Some platforms charge small management fees, typically 0.5 to 1%. Always read the fine print. Current market snapshot, 2026. As of today, the Central Bank of Nigeria has maintained high interest rates to fight inflation. The last primary market auction offered 91-day, 16.8%, 182-day, 19.2%, 364-day, 21.5%. Secondary market rates are similar, sometimes slightly higher. Compare this to fixed deposits, 6 to 9%, and savings accounts, 2 to 4%. T-bills are clearly superior for short-term, safe Naira investing. One strategy I use: laddering. Split your money into 3 parts. Put 1 part in a 90-day bill, 1 part in a 182-day bill, 1 part in a 364-day bill. Every 90 days, one matures, and you reinvest. This gives you regular access to cash while capturing higher long-term rates. Now, before I wrap up, let me answer the question I get asked most often. Q&A section. Question 1. Can I lose my principal? Unless the Nigerian government defaults, which has never happened for T-bills, you will not lose your principal. At worst, you might sell early for slightly less if interest rates spiked. But if you hold to maturity, you get every kobo back. Question 2. Is this better than stocks? Different goals. Stocks can give 50% returns but can also drop 40%. T-bills are for money you need in 1 to 3 years, emergency funds, school fees, house down payments. Stocks are for money you won't touch for 5 to 10 years. Don't confuse the two. Question 3. What about commercial paper? Commercial paper is lending to companies like Dangote or Mountain. Higher interest, sometimes 25 to 30%, but higher risk. If the company goes bankrupt, you lose. Treasury bills are government-backed. Choose based on your risk tolerance. Question 4. How do I know if I actually own the T-bill? The app or bank gives you a confirmation note and a Central Securities Clearing System (CSCS) statement. You can also request a direct custody confirmation from the DMO. Always keep records. Question 5. Can I do this if I live outside Nigeria? Yes, if you have a Nigerian bank account and BVN. Many diaspora investors use apps like Investor 2.0 or Bamboo. But note currency risk. You are investing in Naira. Question 6. What's the catch? No catch. The government needs to borrow. You need to earn. It's a transparent, regulated market. The only catch is that you cannot withdraw before maturity without possible small losses. That's it. Now, let me show you one advanced tip that even some bankers don't know. Advanced tip. Bidding strategy. When you buy through the primary market, if you ever have 50 million Nairas, you can actually bid your own interest rate. But even in the secondary market, you can sometimes negotiate. On Investor 2.0, the rates shown are indicative. But if you're investing large amounts, say 1 million Nairas or more, you can call their trading desk. Tell them, I see 20.7% for 364 days. Can you get me 21.2% if I commit 2 million Nairas? Often they can. This works because the secondary market is negotiable. Banks and investment banks earn a spread. If you ask, they'll sometimes share part of that spread with you. For smaller investors 100,000 Nairas to 500,000 Nairas, the app rate is fine. Just take what's offered. A 0.5% difference on 100,000 Nairas is only 500 Nairas. Not worth the hassle, but for larger amounts, always negotiate. Also, watch the auction calendar. The DMO publishes a Treasury Bills issuance calendar every quarter. Primary market auctions happen bi-weekly. Secondary market rates often dip right after an auction and rise just before. If you're patient, can time your purchase for higher yields. I check the DMO website every Monday morning. It takes 30 seconds, and sometimes I spot a rate spike. Alright, we are almost at the end. Let me summarize everything, and then I have a special request. Conclusion and outro. So here is your cheat sheet. What Treasury bills are loans to the Nigerian government? Return. Currently 18 to 22% depending on tenor. Risk, extremely low. Government has never defaulted. Minimum minus 100,000 Nairas in secondary market. Where? Investor 2.0 app, Cowrywise, or any investment bank. How long? 90, 182, or 364 days. Strategy. Reinvest interest, use laddering, hold to maturity. Treasury bills will not make you a millionaire overnight, but they will protect your capital, beat inflation most years, and give you predictable, passive income. That is more than most hustle culture investments can promise. If you have money sitting in a savings account earning 3%, you are losing value every single day. Inflation is eating your future. Moving that money into T-bills is not sexy, but it is smart. Now my request. If this video helped you understand Nigerian Treasury bills, please hit that like button. It helps YouTube show this video to someone else who is confused about where to put their money safely. And leave a comment telling me, what topic should I cover next? Savings bonds? Commercial paper? How to build an emergency fund? I read every comment, seriously, I do. And most importantly, if you haven't subscribed yet, click that subscribe button right now. This channel is dedicated to safe, passive income strategies for regular Nigerians. No get-rich-quick scams. No crypto hype. Just real, legal, practical ways to make your money work for you. I'm so grateful you watched until the end. You are the reason I make these videos. My channel is Financing You 3 Gokt, and I will see you in the next video, where we will break down Nigerian savings bonds, higher interest, longer terms, and how to buy them for as little as 5,000 Nairas. Until then, protect your capital, grow it slowly, and never stop learning.